Welcome back. You're watching The Money Show with me, Kavita Thapliyal. There are plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have Pankaj Matpal, MD, Optima Money Managers. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. All right, so Pankaj, we have our first viewer on the phone line also with me, which is Mr. Balaji from Chennai. Hi, good evening. How are you doing, sir?
Yes, ma'am.
Thank you so much for sending us your question. And you have invested in one same mutual fund scheme under two different under two different folios. Okay.
Yes, madam. No, actually,
All
I
right.
invested in one and the same scheme, but in under two different portfolios.
Okay. All right. Could you also tell us the name?
Okay, I will send you because now currently I'm outside. I will send you a detailed mail.
Okay. All right. So, okay. Let's directly go to Pankaj. Pankaj, what will be the solution for Mr. Balaji?
I could not hear the question properly. Can you repeat that? Miss, he has
Sure.
same scheme in two
Pankaj,
portfolios.
Yes. So he has invested in one mutual fund scheme, but under two different folios, and one, according to him, shows appreciation, and the other one is having a negative, is showing negative in terms of performance. So he wants to understand what's the reason behind it.
No, Kavita, say if the scheme is same, the performance has to be same.
Only has to be same, exactly.
If, for example,
yeah.
one is direct and one is regular, there may be a little bit difference, but otherwise, mostly to be same. Now, what is the difference? Why he is seeing the difference? The reason, because he invested at different time means. Maybe that when he invested earlier in one folio, that time the NAV was high, market was high, and he entered at that moment. He did not average it out. He did not invested later. And second time when he invested in another folio, that time market was down. Market might have corrected, and then he entered. So that is why he's seeing difference in two folios, or it may be other way around. Maybe that earlier when he invested, that time market was at the lower points and he invested that time. And that is why he's seeing profit there. And another folio, maybe that he entered at when the market was high. So any reason could be there. Otherwise, if we compare from point to point returns in the different folios, same scheme, these have to be similar.
All right, Mr. Balaji, what I would request you to do is just send us the name of your fund and maybe put the folios, and then our experts can have a deeper look and then give you the right kind of strategy and solutions. So far, this is what Pankaj is thinking. All the best for your portfolio and your investments. Next question is via email of Mr. Arun. Pankaj, he says that he is working with the PSU and have 10 earning years left, and he can take moderate risk. In the past 10 years, he has made the following investments, and I will just read those investments out to you. So he has Miro Asset Large Cap, SBI Blue Chip, PPFS Flexi Cap, Kotak Flexi Cap, Miro Emerging Blue Chip, ICICI Pru Large and Mid Cap, Kotak Emerging Equity, Miro Mid Cap, and Nippon Small Cap, ICICI Pru Equity and Debt, and SBI Contra. He's redeemed his investment from Axis Funds and ICICI Large and Mid Cap, SBI Contra. And for debt, he has EPF and NPS, and he's given a breakup of his expenses also. 2 to 3 years, near-term expenses would be around 30 lakhs. And okay, so he also has some investments in debt, SBI Midterm, Kotak Short-Term, ABSL Saving, Edelweiss Bharat 22 Fund of Fund also. Okay. The retirement corpus that he wants to accumulate through this investment, Pankaj, is almost 3 crores. I hope you have the question because it's quite a lengthy one in terms of his investment details are concerned. Do you have the question on you?
Yes. But I have understood what you have read for me. So I can answer on the basis of that.
Sure, please.
So first thing, if you talk about the debt portfolio, even Bharat 22, that is a very good debt fund. And other funds are short-term funds. So at this point of time, I'll say that it's a good choice. If he wants asset allocation, he should stay invested with these all debt funds. And equity fund, you can see that there's a good exposure across large cap, mid cap, small cap, Even the flexi cap funds also have major exposure in large cap only. So this is a good portfolio. Now this 3 crore rupees, what he wants in next 2 years, it will depend on two things: that how much he has accumulated by now. Because scheme's name you have told me, but how much he has accumulated and how much he accumulates. But if you see the portfolio, it is good. And if he wants to maintain a balanced portfolio, I'll say that equity and debt, the combination is good, and he should stay invested here. Now, coming to that amount, means that because he has 10 years investment horizon, what I understood, so he should increase his investment from time to time to achieve the goal. But as far as means all the schemes are concerned, I think that he has a good portfolio.
All right, so we definitely don't have him on the phone line, so not much that can be asked on his behalf, and mostly you've covered a lot of part of the investment strategy also that he's sent across. So all the best, Arun. If you have any more question on what Pankaj suggested, you might just want to reply back or maybe just email back again. We will move on. Rizwan Ansari. I don't think we have him on the phone line, but we have his question, Pankaj, and he wants to do a monthly SIP of 3,000 for 40 years and wants 90 lakh after 40 years. And this is the financial goal. He has to buy a house and children's education. So I think let's start with guiding him as to how he can lay down his financial goals.
See, Kavita, 3,000 rupees per month for 40 years will definitely help him achieving that 90 lakh rupees. But what will be the value of 90 lakh rupees? It will not be even, it will be much, much lesser than the 1/4 of that. So one thing, it is sure that he's a new investor. So I'll say that first thing to him or any investor, you should factor in inflation. So that is one thing. If you want 90 lakh or 1 crore rupees today, it means after 40 years, you will need much more than this, something 10 crore or more than that, because you are saying 40 years. Second thing is in 40 years, your income will increase by many folds. So considering that point also, I'll say that when you start with 3,000 rupees, you should understand that you will not stay forever for 3,000. You will definitely increase your investment. So achieving a bigger amount is also easy in long term if your investment horizon is long. Now coming to investment vehicle, or we say mutual funds. So for long term, definitely equity will help you achieving your financial goals. And when you have a very long investment horizon, you understand the volatility. You should have some allocation in small cap as well. But portfolio should consist of large cap, mid cap, small cap, everything. But you can have a substantial exposure to small cap for long term and diversify your portfolio. Stay invested, invest regularly. That is the advice.
All right, Rizwan, you need to rework on your financial goals maybe, and figure out maybe you just want to increase your investment amount as well. We move on, and Sanjeev Sarvastava's question, that's again by email. And 20 lakhs after 2 years for daughter's marriage, 20 lakhs for son's higher education and marriage after 2 years, and monthly pension of 60,000 after 10 years. For next 15 years, and present SIP is of 85,000. He has some amount going on in EPF as well. The home loan EMI is 19,000 for next 7 years. That's what he says, and he wants to understand as to how he can achieve his goals. I don't think we have the details of his mutual funds. Do you have this question on you, Pankaj?
Schemes he has not mentioned in the email, I think.
Yeah, that's what. So, Sanjeev, request you to send us your mutual fund exposure in terms of schemes and how very well diversified you are, because just mentioning the amount might not be very helpful. But so far, looking at his goals, what strategy would you recommend or suggest? Because these are all short-term goals, 2 years. Yeah.
It's a very good question, and I would take some time to explain it. See, first thing, because he already has 85 lakh rupees and investing, he has 18 lakh rupees and investing 85,000 rupees every month. So accumulating 20 lakh rupees after 2 years is not a difficult thing, because already when he has 18 lakh. Second thing, after 2 years after that, he also wants 20 lakh more for his son's education. So that also looks pretty easy, I'll say. So that can be achieved. Only here one strategy what I'll suggest, because he is investing in equity and his total portfolio, what he has mentioned here is a equity mutual fund, I believe. But because after 2 years he needs money, so he should switch from equity to some lesser volatile schemes like balance advantage funds or other hybrid funds. Because if we expect any correction from here and he needs money after 2 years, he should not lose capital. So considering that fact, I'll suggest that he should switch his existing portfolio to some less volatile schemes. But otherwise, if we say 20 lakh after 2 years and 20 lakh after 4 years, he can definitely achieve that. It looks simpler. Now coming to retirement, he said 60,000 per month after 10 years. But because we know the inflation, the effect of that, and considering that fact, if he needs 60,000 today, after 10 years, he will need something like 1 lakh, 7,000, 10,000, if I assume inflation at 6%. And after 10 years, if he need 1 lakh rupee, after 20 years, he will need more than that. Considering this fact, he should plan to accumulate at least, I did a calculation, so at least 1 crore 70 lakh rupees, he should have a corpus after 10 years. So that should be the idea. But based on his investment, 85,000 rupees per month SIP plus EPF contribution of 35,000, it seems achievable if he increases his SIP year after year by 5%. But that is only for 1 crore 70. But if he wants a better lifestyle, which is more than 60,000 rupees of today, so he has time in his hands. He can increase even more than 5% every year. Means he can step up by a higher rate than 5%. But otherwise, whatever he has done by today and what he's planning, it looks means achievable.
Okay, so that's the solution for Sanjeev. We move on to the last question of the show, and that's via email from Samiksha. And Pankaj, do you have this question on you?
Yeah.
Medium to high risk taker, 15 years, and she has a blue chip, she has a mid cap, she has a flexi cap, small cap, and SBI Contra as well. She has 2 small caps, in fact. What are the changes that you would recommend?
Kavita, this portfolio is good. She has a good investment, large cap, mid cap, small cap. Only thing is that no change is required, but only I'll suggest that she should increase her investment year after year, because if we take this 10,500 rupees per month investment for 15 years, only 50 lakhs she can expect with this. And we know that over a period of time, that value of money comes down. So considering that fact, year after year, she should increase her investment. Otherwise, the portfolio is good, no change required in this.
Right. So, Pankaj, what I really want to understand is maybe she also looks like someone who is a first-time investor. How well diversified is she as far as, someone who's a first-time investor is concerned?
Investor, but still you want to create wealth. So equity will only be helpful. So this thing is confirmed that you should have more exposure in equity. But in equity, we know that there is a large cap, mid cap, small cap, and every market segment has its importance. Though in long term, we see that small cap have potential to outperform large cap, but small caps are more volatile. So investors, unless they understand this, that volatility is a part of equity investment, they should invest more in large cap, some part in mid cap, lesser in small cap. But by the time you get maturity, you understand that if your portfolio shows some volatility and you'll stay invested, you will not get scared of that, then definitely small cap must be a part of a portfolio for long term. So one thing is psychology, because sometimes we have seen that when the volatility is there, though investors understand in long term, schemes will perform, but then they exit from that. That is the problem. That is why both the things are important. One thing is that allocation across the market segments. Second thing, your behavior towards the money.
Okay, so that's a very important lesson, and not only for someone like a Samisha, but then investors usually should understand the kind of discipline that's needed as far as the investment is concerned. And also, Pankaj, one last a tip from you for all the investors who just have a goal of creating wealth. I mean, that's a fantastic goal to start off your investment journey with, but then how important it is to further go and, have a financial goal lined up for yourself. Wealth creation can be a goal. No one can deny that, but then it's very important for you to give a ballpark figure to even that wealth creation corpus. Okay, so how can you structure your investments that way?
You have a goal, you know that how much you want to accumulate and how much time you have in your hands to achieve that goal. So you can track your means performance. If you feel that you are little far from that, you can increase your investment. You can change the asset classes. So that becomes easier. Second thing, when you align your investment with the goals, it becomes easier to stay invested for long term, because we know psychologically when the emotions are attached to anything, the value goes up. So unless you have some goal achieved to this, there is no value. You know that you want to accumulate 1 crore rupee, or you want to accumulate 50 lakh rupees. But what you are going to achieve with that money, that is important. The moment you have a goal attached to that, you become a sticky investor. You'll stay longer with that money. And even if sometimes some need arises in between, but you feel that goal is important, you'll stay invested. So always, I'll say that always align your investment with your financial goals and set a realistic goal. That is very important.
All right, set realistic goals, very important tip. And with that, thank you so much, Pankaj, for being on the show and helping our viewers with their financial portfolio queries. And time to sign off. But then I'm going to leave you with our WhatsApp number and email ID, where we keep waiting for your financial portfolio related queries, which we get answered by our experts live on the show. We have a WhatsApp number, email ID. Keep sending us your questions. Thank you so much for watching. Goodbye.